Now, frustrated investors got no relief in April as the United States stock markets fell deeper into the red. The Nasdaq Composite tumbled 13.3% in April, the index's worst monthly performance since 2008, while the S&P 500 fell 8.8% and ended the month at levels last seen in May 2021. Now, the sell-off was wrought carnage but for some of the largest names in the stock market, as the Nasdaq 100, an index of largest non-financial companies, which is in the bear market, was down more than 23% from its last all-time high in November 2021. The current earnings season has been particularly bad for tech companies, though other factors are also at play in the third worst start to the year in the S&P 500 history. However, rampant inflation is pushing the Federal Reserve to be more aggressive in raising interest rates. At the same time, market participants are nervous about the global economic growth. Well, thanks to high oil prices, the war in Ukraine, and a spike in Chinese COVID-19 cases. I'm being joined live from the United Kingdom, the startup founder of Wealth Hackers, Mr. Olubenga Onifade. Mr. Onifade, thank you so much for your time. It's good to see you today.
Good afternoon.
Yes, we see the figures coming in, particularly from the foreign market. Nasdaq Composite tumbled 13.3%. I think that's for the month of April. But let me ask you, what's your overview looking at what's been happening globally and its effect on trading in the markets?
Okay, so just picking up from where you stopped, yesterday the Fed, who's responsible for curbing inflation in the United States, they did increase the interest rate by 50 basis points, which literally means interest rate is now gone between 0.75 to 1%. And that's actually created an effect. And what they are trying to do, in essence, is to try to balance off the books. Because if you look, I mean, we all were here 2-3 years ago when COVID-19 hit, and in 2020 there was a lot of spending in order to combat inflation. Checks were sent out directly. There was bond buybacks by the Fed, trying to buy just in order to make sure things do not get out of hand. But you have to understand, all this money has come from somewhere, and you have to balance the economy. Now, it spiraled out of control. 2 years later, inflation is out of control. It's at a 40-year high. So if you were born in 1982, celebrating your 40 years birthday, unfortunately, inflation was at that point right now where you were. And this has actually created a ripple effect. It's happened in the first world countries, not just first world countries, big economies. You're looking at India, Australia, who really increased the interest rate. They've done the same thing for the first time in 11 years. India has done the same thing as well. It was a surprise rate hike in India, because India usually have a flat basis points, which they're going to do, but they just created a huge surprise. The UK, they did the same thing this morning. So unfortunately, the world is in a lot of mess, in a torrid mess, and it's going to be a lot of journey, because there's still a lot more planned for the year.
Talk to me about the gas price and, of course, fuel price hike and, of course, impact on users in the United Kingdom. How has it been with regards to this? Of course, it's a result of the Russia and Ukraine crisis.
Sure, absolutely. So now energy prices just gone through the roof. We've seen energy prices more than double, and this is actually again cascaded to household energy users, because thankfully in Nigeria we don't have to use gas to heat our homes, but in European states they need gases to heat their homes, and of course we all need fuel to drive around and power industry. So again, due to limitations of oil and gases as well from Russia, and the tension is created, and the cost has to be passed on to the customers, unfortunately. And in the markets, commodities and oil and gas has actually gone through the roof, while supply chain is being hit as well, because you might say, yeah, but it's a problem between Russia and Ukraine. However, there's the route which you have to pass through your goods through Ukraine. So supply chain has been hit. Even not just that. I mean, there's a few other things that Russia supplies the world where they are number one. Russia used to be number 11 in the world. I don't know what the statistics or data says, and they haven't compiled it yet. But this has actually created a ripple effect on the global economy. And again, these energy companies, they've passed it on to the customers. And you see the government, people lobbying the government to start charging or taxing these energy companies, because they call it a windfall tax, because they make a windfall profit. I think, was it this morning, Shell, they tripled their profits. Yesterday again, BP made a record-breaking profits as well. So this is actually, they are benefiting, the big corporations, but unfortunately the consumers are struggling because they've got to pass it on somehow to them, and everything is going through the roof. And unfortunately, the consumers have to bear the brunt.
Back to the stock market, many analysts would argue that this is the right time to invest in the market, maybe when prices are a little low. Do you share that sentiment?
Well, you're right. People say buy when there's blood on the street, or there's this anagram people talk about, or when you think it's people are scared to buy, that's when you should be buying, and when everybody's buying, that's when you should be selling. But I did actually say to a few of my peers today that it doesn't actually always apply, because if you think about it today, days like today, we've got basis hike, which is more still coming. We've got interest rates high. Inflation is not just going to disappear overnight. Yesterday, when the Fed chairman, the United States Fed chairman, Jay Powell, when he did talk about the interest rate hike, which is what we expected, the 50 basis points, the markets swallowed that, took it very well. And there was a mini rally, but I did tell people you've got to be very cautious, because there's still more interest rate hikes coming in. We expect inflation to peak this year. Inflation doesn't just die and grow old. That's something economists say. It doesn't just grow old and die. Rather, it's still there. It's still peaking. It hasn't gone to the peak yet, which means we still expect corporations to. So you still expect corporations to still struggle in the United States. Likewise, in the United Kingdom, small businesses are closing down at record rates. Meanwhile, people are predicting there will be an unemployment crisis at some point, maybe next year. But in America, for example, there's a supply which outstrips the demand, which means for every job available, there's only half the people to apply. So there are more jobs, but on the stock markets, things have really crumbled down to the near all-time lows of 52-week lows, like people tend to have as a tagline. But overall, right now, I will say you've got to be patient. For a trader, it's okay. You could yield in the volatility, but you as an investor, I will say, you've got to be hawkish, which is what I tell people. So you got to be hawkish, but at the same time, be dovish in your appearance.
At the time when we thought we're back to full business, and everyone thought that COVID, well, not totally eliminated, but at least we need to continue to take precautions. We see what's happening in China and a little bit of lockdowns. And of course, many say this will affect the price of crude, which already we've seen the volatility in that market. Are you going to react to this? What are your thoughts? And why do you think this would affect the market? China remains very strategic. It supplies to all countries, even Nigeria.
Sure. China is a factory of the world. That's what I say to people. Okay, and if the factory of the world is shut down, guess what? The world does not get its supplies, and as a result, it cascades, or it does affect supply chain too. So China has actually been evidence very well strict in managing COVID. But if you remember 2020, some data came out from China when they talked about COVID deaths, just about having I think a few hundreds, and it was actually, people thought that figure wasn't actually all true. Okay, now we could see the real effects coming out, and they have this zero tolerance policy on COVID. They see a little hint or a little sniff of it, they want to deal with it with a good iron hand. So yes, China is trying to handle it right now very well, but we've actually seen the effects of not dealing with it very well initially, because that's one of the things people blamed for the economy right now, with the way people dealt with COVID. So unfortunately, Shanghai's got a lockdown. If Shanghai's got locked down, 90% of the world imports from China. China relies on exports to survive, and if it cannot survive on its own, the world will not survive on its own, and everything will need to a near near-time collapse, really. Because one of the things the economists are talking about again is the fact that we have, we've got 2 quarters now follow on inflation, and that could trigger a recession. But again, they're being cautious in trying to call it a recession. It's not really a recession yet. A lot of people are thinking, oh, maybe we could call it a stagflation. But as far as China is concerned, China is definitely dealing with pandemic. I think the economy is actually on the back burner. They want to deal with the pandemic because the whole world is a different world compared to what China is dealing with. And as a result of that, China being shut down, unfortunately, the world is feeling the effects. And if you look at the earnings reports, which is a quarterly earnings, almost every mega corporation, the Apple, the Googles, they all give the same reason for why they cannot perform very well. And that is supply chain issues. And that goes back to China.
Great stuff. We know of Elon Musk, the accusation of Twitter. Of course, that will be one interesting one I would like to get your comments on. And we saw the impact immediately on Tesla shares. It lost about $125 billion of the vehicle maker value immediately. What's your reaction to the deal? And moving on, what are your expectations?
Okay, so with Twitter was an asset which was actually in my personal portfolio as well many years ago. I did not see it going anywhere. Unfortunately, I had to dump it. And now Elon Musk has, he's actually said, okay, he feels there is a way to monetize this platform very well. They're not getting the best from it. So he placed an order to a cheeky bid at $54.2 a pop, really, which is about $43 billion. Elon Musk cannot afford it. We all clearly know that. But of course, he has to unload some of his stocks. But the talks are still ongoing. The deal hasn't closed yet. He thinks there's a way. People think it could be, and Twitter's actually been very clever. They try to make sure that Elon Musk hasn't, because he got a certain number of shares, a certain percentage. I think it was about 9%, and they said for you to be to have that takeover, I think you need to have a lot more. So okay, they invited him to the board. Okay, that's one of the best brains in the world. We'd like to have him on the board, but before he triggered a forceful takeover, which they're still discussing. Like I said again, he couldn't afford it. It's created an adverse effect of on Tesla shares, which he sold, and now the growth stocks, which Tesla are going down, and then triggered with the number one shareholder selling or unloading in the millions. So that is actually not very good. But what's been coming out more for that is that there's been more takers, bidding in with it. One of them is the crypto largest crypto exchange chairman, CZ Shangzhen, saying, okay, how about we have a joint bid? I think there was a list I saw with about 15, 20 people on it as well. So I think I'm not sure how they're going to make money from it, but some of the things people thought is, okay, that could be a really good default marketing mechanism, because if you think about it, a lot of people are right there on Twitter, even though he did say it was meant for free speech purpose. But of course, you've got to understand the world's richest man, he wouldn't do anything without a monetary gain involved. And that's something right there. But again, as an investor, would I be looking at it at all? Right now, not in any way. I think the shares of the stock itself, I think, is way overpriced. And of course, he knows the price he quoted for is way more than the valuation. Hence, why they could accept it. But they're still talking, they're still discussing, and he's looking into getting all the people involved. Maybe it could be a joint bid that way, and they, collectively they could find a way to monetize it and see value. But right now, I have not seen any value. And there was a point I tried to make. Just looking at how this whole inflation in the first world countries, mega economies, affects Nigeria, because there was something the Emefiele, the CBN governor, said in January that he doesn't think this would affect Nigeria because the pandemic, when people got the checks in the pandemic, the reliefs in America, the inflow did not actually go into Nigeria's economy. And unfortunately, I would actually say I disagree with that. I'm not going to say the CBN governor is wrong, but I would say I disagree with that, because they has a cascading effect on on third world economies, because number one, we rely on the economies of the first world. Number one, we do a lot of purchase and businesses with them. That's number one. Number two, our exchange, our naira, it's pegged to the dollar. Our commodities, which we rely on, which is our key source of revenue, is pegged to the dollar. And if the dollar is struggling, if it goes all high, then the dollar becomes more expensive. There's going to be pressure on the naira. The naira is going to go down, and it's going to affect our economy adversely, unfortunately.
Brilliant stuff. Finally, before I let you go, Mr. Gbenga, what's your projection with regards to confidence, investors' confidence back into all of the markets, not just Nigerian markets, with all of these uncertainties? When do you think that things will play out normal like they used to be pre-pandemic levels?
Okay, so we are, as an investor myself and a few colleagues, so I'm telling people right now, more of a trader, less of an investor. So people say cash is king. It doesn't hold any more weight better than now. But at the same time, I started telling people all over again, cash is not even king anymore, because if you tell me cash is king and there's an inflation which is eating up from your cash, so that's not king. So doesn't really hold well. So if you've got something of value where you can invest in just to hold that cash, that's fine. But if you want to hold cash, that's probably a necessary evil, because if you want to start investing right now, think the value has been gradually eroded. There's been more interest rate hikes, which has been planned. So expects your value of whatever asset you want to invest in to still depreciate a lot further. Some people are putting money into gas, into oil and gas. I think that's actually a better idea, because we know there's a lot of pressure, and oil and gas is actually that's the way to go right now. So that's number one. Number one. Number two, in terms of peaking, there's still high inflation. I believe inflation is going to run on, and people say it's peaked already. It hasn't peaked, I believe, because price of things haven't gone down. If you see price of things going down around you guys, then inflation has peaked. But as long as the price keeps going up, it hasn't peaked. So that's number two. So I'm expecting the end of the year, maybe, at least, before inflation starts peaking. And towards next year, the central banks, they've actually hinted that's when they will start coming down and lowering down. And in fact, if you look at the expectations they gave next year, they've all given down lowered expectations in terms of economy. So there's a contraction right now. It's not, the Bank of England, for example, they reduced the growth rate for England for next year. They had to cut it down by 0.75%. So which means we expect the economy to shrink a lot lower. But from next year up to 2024 is when I believe we'll start seeing the real effects of things, and things start moving all over again. But 2022, 2023, it's a year where we have to get to work, get inflation down. And me as an investor, I'm actually holding more cash right now, keeping my cash to myself. Again, like I said, cash is not exactly king, but it's probably a necessary evil. I'm not exactly looking at investing, but I will be looking at when I think inflation peaks, when there's more data. The central banks themselves haven't really got much more data to work with. But, these things are lagging indicators. We're looking at the more data comes in future, then the more we can actually start reassessing and start putting the money back out there.
Great stuff. Thank you so much, Mr. Lugbenga Onifade. He is a startup founder of World Hackers. Joined us from the United Kingdom. I appreciate your time. Do enjoy the rest of your day.
Thanks for having me. Thank you.